Randall Chongson, and I'm gonna do another video for you guys. This time, there's been a lot of questions what's going on, COVID, and of course, a lot of people are concerned about their real estate property. And what better way to discuss these things? One to go to the, I guess, the most premier, okay, consultant or whatever it is you want to call him, a guru of property, is Mr. David Leechiu, the guy behind Leechiu Properties. David, it's nice to talk to you during these times.
Thank you, Randall.
I know you've been, a lot of people have been asking you a lot of questions. Just before we do your presentation, just question, how did you handle your panicking? Did you have them, your panicking clients or all, especially at the onset? How were you able to handle them?
Yeah. I mean, I've been holding their hand all throughout this time, even before the lockdown happened. You know, it's been very, very challenging, and you kind of want to get as much information on the ground without being negatively affected by it. You know, because it's funny. I was just telling my kids earlier that you got to go through this crisis without getting crushed psychologically. You know, there's so much bad news in the market that you have to find a way to get over it.
Yeah.
And look at things very coldly.
Okay, so David, during when these things started, there was, I guess, a lot of clients are panicking, calling you, and really, really concerned. And I guess if I were your client, I'd be the same. But just curious, what were their primary concerns? What were they asking you about?
Yeah, so the first thing they're trying to figure out is what is going on. There's so much bad news, but how much of that is reality, and how much of that is going to impact them, and how much of this is going to go on? Is it going to go on for 1 month? Is it going to go for 1 year? It's going to go for 2 years? Are things going to go back to normal or never? So yeah, and then look at what happened today. I mean, in the last 2 days, oil went from something of value to negative $37 per barrel. It's unthinkable. What does that mean to people? What does that mean to the property market? How many jobs are going to get lost permanently because of this?
Okay.
Too much going on. And what clients look to us to do is to try to make sense of that and translate that to rental cash flows, so that they want to know if they can still pay their loan obligations. Number 2, can they still pay their rents? Number 3, where are prices going to be?
So
and I can tell you that there's so many people out there with a lot of dry powder, unmobilized dry powder. They just want to buy assets.
Okay.
And right now, people, the sellers, there are very few sellers in the market, and the ones who are selling don't want to sell at discounts. They want to sell pre-COVID prices. The ones who want to buy, they want to buy only at post-COVID prices. And so there's that sense of endurance. You know, who can hold their breath longest will win between the buyers and the sellers.
And how long do you think this is going to last before sellers are beginning to give in?
My bet is that if this persists longer than August, then we're going to see a lot of structural problems happen.
Okay.
By that I mean, what is this? This is the race is not whether we find a cure or not. The race is about how quickly are we going to adapt to the new normal, and what is that new normal? That's the big question. The moment we are able to adapt to that, then I think we're going to be business as usual very quickly. Not to the same sense as business as usual pre-COVID, but the new business as usual, adapting to the new normal.
All right. I got to review your slides, and really, really interesting. And I guess we can share those slides right now. So we'll put it up your slides. So we're going to talk a little bit about what, and I guess it's a briefing of some sense. So David, take it away. You want to be able to discuss some matters that are very important for all of us.
Yeah. So I think if I can go to the next slide. Before I dive into this deck, I just want to start by quoting Jack Ma, and he said, of the many things that he said, there's one quote that really applies today, which is, "Today is bad, tomorrow will be worse, but the day after tomorrow will be sunshine. It will be beautiful," and that's what we have to. That's what we have to look forward to. That things will be tough tomorrow, and we have to accept that. And but we have to look beyond what's happening today and figure out how things will be how things will be after. And I think things will be much better after. So now we're going to cover a bit about the office sector, what we see in the BPO sector, the POGO sector, and something to look forward to rather is the REIT sector, which I think you're going to be doing a lot of, um, and then closing next.
Okay.
So we had a fantastic 2019, 2018, but very quickly went south after that. I mean, the Philippine economy and the real estate market has never been better than the year it had in 2019. And then after that, a whole bunch of things conspired to make things very difficult. And we're all familiar with that, no? From Brexit to what's happening with oil prices, to the crackdown in POGOs, the BPO sector and the taxation that they're going through right now, Taal. I mean, there's a lot of internal, external forces that have really junked 2019 and went from very, very good, all-time very good to all-time very bad today. Next. But I want to remind people about how great things will be, because there are many good things to be grateful for. The first one is um, we still have a lot of infrastructure projects in the pipeline that is coming into the market in the next 18 months. And yes, while they're delayed, the moment they start construction, which I think will happen in June or July of this year, the moment they commence construction, they will be completed in the next 12 months. These are the 9 infrastructure projects that will benefit NCR and the provinces immediately adjacent to NCR. So that's Clark all the way to Cavite and Laguna and NCR, that will benefit 30 million people. And our estimates is that it will cut traffic by half. And the biggest opportunity there is that it will release so much productivity into the market. The biggest capital of the Philippines is human capital, and you're going to get 50% more of that because of the traffic being cut by half. Number two, so much bailout money is going to benefit the Philippines. Every company and country in the world is going to pump and print money and pump money into the system to the point where interest rates are falling and collapsing to all-time lows, and we're trying to understand what that means. And they're going to benefit the Philippines. Coupling that will be the lowering of the triple Rs, the increase in liquidity because of the lowering of the reserve ratio requirement in the banks, and the lowering of interest rates. And then accompanying that will be the increase in demand coming from the BPO sector and the POGO sector, which we saw back in 2007, 2008, and 2009, where demand doubled because of the global financial crisis. And then you've got the POGO sector complementing that. When the travel bans are lifted, you're going to see a resurgence in the POGO sector. And we think more countries other than China are going to come to the Philippines to do POGO work. And that's going to create demand across all sectors, not just in the property market, but predominantly in retail, such as food and logistics. And then this government, to pump prime the economy, will open up more industries that are currently shut down from foreign ownership. Before COVID, the government's already been doing that. And now post-COVID, they're going to realize that they have to open up more industries to allow for more than just 40% foreign ownership, to bring more capital into the country. And then you've got many companies right now realize that they have too much concentration in China. And so the knee-jerk reaction is to offset manufacturing. They're currently moving manufacturing facilities out of China or stopped expanding in China to open up in countries like Thailand, Vietnam, Indonesia, Myanmar, and Cambodia. Manufacturing sector will almost completely bypass Philippines because of the cost of operating here. But we're going to see tremendous amounts of Western companies that have a massive base in China that will move out of China or stop expanding in China and bring that expansion into the Philippines and import Chinese labor from China or Taiwan, bring it into the Philippines and open up in the Philippines. Why? Because the POGO sector has been doing that for the last 3 years in the Philippines. And it won't just be Chinese labor geared to the POGO sector. It will be other jobs such as online retail, such as IT, such as customer service, such as back office, and HR and accounting and IT and finance that are currently being done in the Philippines for Chinese language will be done for, that's currently being done for English language that will also be done for the Chinese language. And all for diversification from China.
David,
And
just interject a little bit. I guess a lot of people are saying, but is it really going to happen, the exodus of a lot of this from China? And what would be the trigger for them to do that? I mean, aside, I guess COVID showed the way that they are susceptible, but isn't all other countries susceptible to many things?
I think every global corporation is thinking about diversification and concentration risk. So many companies are saying, what's going on? How do we survive and prosper? And the third thing they're going to do is how do they diversify to limit risk?
So it's like a risk management for them.
It's risk management for them, yes.
Got it.
Yeah. So whatever step. So first of all, we have to accept the fact that demand has fallen everywhere. For example, the demand for iPhones, the demand for laptops, the demand for shoes, the demand for clothing and oil, all that has contracted, which is going to produce a corresponding reduction in supply and infrastructure, right? But whatever will be left to service whatever will be left of the new demand, a portion of that will be offshored to the Philippines. And that's where we're going to win. And while things are bad, let's not forget how bad things were in 2008 and 2009 and how that recession produced a significant amount of offshoring for 10 years straight into the Philippines. And that's going to happen again because this is not just a financial crisis. This is a total holistic economic recession globally. And that is going to produce more urgency to offshore. And the 4 cities where you can offshore at a scalable, meaningful, quick way in the world will be Bangalore, Manila, Cebu, and Clark. And those are the only 4 cities that you're going to see offshoring benefit. Yes, other countries will feel that they have too much in the Philippines and they will try to offshore in other locations like Middle East and Latin America. But the reality is that there's not enough scale. And you cannot ramp up as quickly in those countries as you can in these 4 cities. So the multinationals that may feel today that they have too much in the Philippines will still offshore to the Philippines, but in other locations. They're going to experiment in other locations. This is not an environment where companies are going to experiment.
Okay.
This is an environment where they have to urgently, scalably cut costs and relocate productivity from one cost center to another cost center. And again, the 4 cities that are going to benefit from that effort will be Bangalore, Manila, Clark, and Cebu.
David, you mentioned of the 4, 3 are in the Philippines. What What's
Yes.
their advantage over the others? Why can't other cities who are maybe can be they can do they have more money, they have more capital, or even why would
Because
yeah?
because
Anong difference na sa kanila?
there because there's still this transition out of India.
Okay.
Many companies already have too much of a presence in India. Imagine that many companies like JP Morgan, Wells Fargo, they probably have anywhere from 2 to 3 times what they have in the Philippines, in India. And there are enough locations in India to scale because the Indian jobs are chasing higher value work. They're into IT, they're into data analytics, they're into high level engineering, design, architecture, and architecture of logistics and businesses. Who's going to pick up the lower end work? Well, the Philippines is picking up the lower end work. And like I mentioned earlier, the one thing to look forward to is that it's not just going to service English-based language requirements. It's going to service the second largest language being used today, which is Chinese.
Okay.
And that's going to compel many companies right now to open up businesses and back office work in geographies where they can attract Chinese labor, which is Philippines and possibly Indonesia and Vietnam.
Wow. So it's like saying like POGO was like a training ground for us of some
A
sort.
precursor, yes.
Or some sort.
It is a training ground, a test case for Philippines to offshore credibly and import labor
And
from
with
outside.
scale, and the scale that we were able to see, right?
Yeah.
The way we allowed them to come in and the scale, it's in a way like a precursor, as you said. So I guess it is something. I mean, the POGO has been getting a lot of bad publicity, and in a way, there is very good information for us. So continue,
Yeah.
David. Sorry.
And so I think that's the one thing to look forward to, because many of these global Western corporations in China already have a significant base either in India or Philippines, and they're just going to replicate that but on a different language platform and import the labor into the Philippines. It's fantastic, and very soon they're not just going to do that for Chinese language. They're also going they might also be able to do that for Korean languages, for Japanese languages, for other languages. Because the one thing that the Chinese labor is able to exercise living in the Philippines is developing their language skills in English. The Koreans might want to come here not just to work getting Korean language pay, servicing Korean language work, but also by living here, being able to develop their English skills. And there are many other cultures and people that will want to do the same thing. And they have to look at it in a way that they will be paid to learn English in the Philippines, where the cost of living is still some of the cheapest in the world.
And they can play golf.
They can play golf and hit the beach.
Yeah, and hit the beach.
Yeah.
All right. So that's in a way we're saying that even despite of all these things, there are a lot of silver lining that we can see, and
Yeah.
we benefited from the '08, right?
And as crazy and as delusional as I may sound today, you just have to remember what the market was like in 2008 and 2009.
Mm-hmm.
Not the stock market, not the financial market, but the real estate market. The real estate market in the Philippines in 2008 and 2009 was unique in the sense that we are the only country in the world where demand grew. No other country in the world had a status quo or growth in demand for office space. The Philippines was the only place in the world where demand did not contract. In fact, when I was working for a multinational company at that time, we're the only country in their global operations where we expanded headcount and office space.
Wow.
And it was weird. It was weird. Everyone in the world was saying, what the hell is going on in the Philippines? Why is there growth? Why are people taking positive real estate consumption, whereas everywhere else in the world is contracting, even in India? So that is going to repeat itself, because today, the managers of the economy know what to do. They already have a playbook from 2008, 2009. The playbook is not exactly the same, but they have most of it already applicable. Whereas in 2008, 2009, we didn't know what the hell to do. So the pump priming, the what you call the quantitative easing came in very slowly and very late.
And now we're doing it ahead. Seems to be.
And now we know what to do, and so we're doing it ahead. Offshoring was something that many executives had to convince. They had to do. They had to convince their board, and now they know. Now they know what to do. They will say, "Yeah, okay, let's do it." We've been holding that for so long, but now we should do it. Now, the risk there is that a lot of politicians are going to play this up and say, why are you going to move jobs to the Philippines when there are 20 million jobs available in the US?
Yes.
Well, despite the fact that unemployment is so high in the US, the economic benefits to offshoring cannot come any close. The benefits to offshoring are too big to ignore. And while some companies will make an effort to keep jobs onshore, some will be forced to offshore. In fact, majority will be forced to offshore.
It seems to be
the 20 million jobs that are currently available in the US are going to, a big chunk of that will meaningfully be brought, will be converted to jobs again as the economy bounces back in the US. There's too much money, too much energy, too many resources and brilliant minds in the US for a long recovery to happen. It will be a quick bounce back for the US.
All right. David, just go through your slides. You also mentioned that certain things are going to be good, like liberalization of foreign ownership of more industries. That's going to attract more to come, and that's going to affect the property market.
Yes, it's not the only condition, but it is certainly a prerequisite to attract more jobs to the Philippines. Of course, by opening up the economy and industries, you need to have a credible platform of continuity and protection of property rights and contracts. That's something that we need to show the world that we can do, right? So there are many more things in the pot that need to be created, but that is certainly a prerequisite.
This is something that I find looking forward to. The REITs, REITs, they're coming in.
Yes.
And you mentioned this.
Yes. So, one thing that is very interesting about the Philippines is that the conglomerates own a disproportionate amount of office space and mall space to the tune of 22 million square meters. 22 million square meters. There are very few countries in the world that can say to the market that they have 22 million square meters of assets to REIT, and that will ensure a very long period of growth for the REIT market, a very long sustainability program for the REIT sector in the Philippines.
So David,
the assets are very high quality. The assets are very high quality. The tenants are very high quality. The geography is very diversified. The asset class is very diversified. And what we've seen in the world is that the REIT sector is one of the safest places for putting money. It is one of the most defensive assets you can ever own globally.
And these developers that we know of, maybe just 3 or 4 of them, they're highly profitable. They've always been profitable, regardless of the economic conditions. So I guess that's going to even make it more attractive for them.
Yes. I certainly am excited about that. Wow. So maybe I'll jump through some of these slides. Yeah. Angel, can we go to next slide? Next slide. So let's review 2018 and 2019. We had 1.6 million square meters of office take-up in 2018 and 1.7 million square meters of demand for 2019. And again, this is probably the 4th largest market in the world, Manila. And that's the amount of space taken up by the different industries. BPO and POGO certainly comprise 70-80% of that demand. Next. And if you look at 2020 first quarter, you compare it versus 2018 and 2019 first quarters, we certainly have seen a 53% drop in demand. And in 2020 second quarter, so the months of April, May, June, we're going to see the transaction volume go to zero, maybe close to zero. But at least in the first quarter, we've seen 157,000 square meters of space taken up in the market. So that is not zero. Next. And unlike, okay, so this slide shows you how much money you have made if you bought property in Bonifacio 10 years ago. In 2010, office space in Bonifacio was worth 100,000 pesos. And today, it is worth 250,000 pesos. You would have made 2.5 times your money in 10 years. And just imagine what we went through in the last 10 years as an economy. There's been so many ups and downs, and yet the property sector, particularly the office market, has gone through significant upside. You've had capital values and rents continue to grow over 10 years. Next. Now, what makes this crisis different? This is one of the few times when you have something like COVID affect not only demand, the demand side of the equation, but also the supply side of the equation. So we're estimating that demand will be somewhere around 800,000 square meters this year. It's about half of what it was last year, right? But we're also seeing supply drop by 50%, anywhere from 40 to 50%. So while we see demand clocking somewhere around 800,000 square meters, we're also seeing supply come down to about 800,000 square meters. And so even with that, the supply and demand will achieve equilibrium this year, 2020, which means that we will avoid a glut, which means we will avoid a fall in rents.
So
with
David,
one exception.
Yeah.
With one exception. The exception will be Ortigas Center.
Why is that?
Because a lot of space in Ortigas Center coming online, and there's not enough PEZA space, which will cater to the PEZA BPO tenants. And there's the two local governments that govern Ortigas Center are not allowing POGOs, or restricting the activity of POGOs.
Okay.
And so with very little demand and very high supply situation, we're going to see a train wreck in Ortigas Center.
David, just questions. Of course, you're saying that demand and supply will go down, and we all know that. If that's the case, it's equilibrium. We don't see faltering of prices of rent and all these things because of the decline. Why is supply going down as well?
Because nobody can commence construction of these properties because of the lockdown, and that has produced delay in construction. And when the lockdown is lifted, you still have logistics. It takes time to ramp up the supply chain. You know, when you start when you open up the construction sites, you're going to have to import steel again. You have to start the furnaces of many of these things, and that just has a compounding effect in the delay of construction supply, and therefore construction activity.
And it takes time to construct, right? So there has to be.
And it takes time to construct. So we think that the supply side will be delayed by quite a while.
So when demand goes back up and supply is not yet there, is this a possible scenario wherein price can actually?
So in this slide, we're seeing supply on the red, orange line, and demand on the blue line. And you can see that if demand, sorry. So this is the supply curve, right? From 2020 to 2025. You're seeing blue, which is the original supply number before COVID. And red shows you the new forecast of supply post-COVID. And then the gray bar, the gray shaded margin horizontal line shows you the range of demand for 2020.
Okay. Okay.
The green line crossing the top line of the chart, top portion of the chart, shows you the demand in 2019. So the supply line, the new supply line is red, and at every moment there, from 2020 to 2022, you see that the demand is higher than the supply. And then we see the supply side higher than the demand slide for 2020, the dash gray line. But that is temporary because we think that as soon as the lockdown is lifted and the new normal happens, we are going to see demand go way beyond the supply line. And so we're going to see prices go up again in 2021, if not even second half of 2020. And then that will be only good for the property developers.
All right. So that the imbalance will be working in favor of the sector, ultimately.
Yeah. Yeah.
Very helpful, David. I think you have other slides to show.
Yeah. So next. This is how we see the market behaving versus 2019 versus 2020. And that we see that third and fourth quarter, we see resurgence in demand. Next. There's a lot of space coming online, but very limited PESA. And so we advise tenants to go and chase PESA space now. As difficult as it will be, the fact is that there will be a deficit in PESA space in Metro Manila. Next.
What did the government want to increase the PESA space? Is it, I mean, to attract this?
We have to increase the PESA space in the market because the PESA companies need it.
But David, is the government not keen on increasing PESA space? I mean, if you're gonna
at the moment, the president has not lifted its moratorium on PESA space in Metro Manila. We need that lifted. And so we are pleading with the government to lift it.
Why is the government lifting it?
By lifting by having the moratorium in place and not granting any more PESA space in Metro Manila, it will force the companies out to the provinces. The reality there is that there are very few places in the country outside Cebu and Clark where you can have scalable, quick ramp up of labor in the provinces. Next slide. And that's why you see that we need to facilitate the expansion of the POGOs and BPOs in the country. This is the demand slide in blue, and the hard line is the actual demand. And the dash blue line is the demand if there was no POGO. The vacancy is the one in red. And you can see that the hard line shows you the actual supply vacancy per year. And the dash line shows you what vacancy should have been without the POGO sector.
Okay.
And I want to highlight to you 2008 to 2009, comparing it to 2007. And you can see that there is 100% increase, almost 100% increase in demand, comparing 2007 versus 2009. And again, that is unique. And the BPO sector continued to grow in the Philippines over the next 10 years. But what we've seen in the last 3 years is that the BPO sector is not enough. You needed the POGO, the injection of demand from the POGO sector to grow and absorb all the space.
Because
and so if
building a lot more.
If we do not encourage the POGO sector, the office market will get very hurt. Next. And so we say that the POGO sector is our friend because it's not just office space absorption, it is also a significant demand driver for residential property. So today, the POGO sector occupy 1.6, 1.7 million square meters of office space throughout the country, not just in Metro Manila. But they also occupy easily 1.6 to 1.8 million, maybe even 2 million square meters of residential space in the market. And in addition to that, just look at how much the governments benefit just in collecting a portion of what they should be collecting. They're now collecting as much as 15 billion pesos in taxes across the different tax bases in the country. Next. And then look at how rents have behaved in the last 5 years. It has really pushed residential prices, in particular in the Bay, and all throughout Metro Manila. And again, it's not just in Metro Manila. You're seeing that in Cavite and Laguna.
So, David, the argument with POGO that you always hear is that they're not paying enough taxes, and is it really going to be beneficial to the economy as a whole? Property owners?
Definitely,
Yeah.
definitely. Whatever transgressions
Okay.
they may have today
Mhm.
is a temporary issue and is a different problem
Okay.
altogether. You know, the fact that they are not, we are not able to collect the tax is a different problem.
Okay.
In the same way that immigration, the problems they have right now in immigration is a different problem, right?
Yes.
The foreigners coming into the Philippines and the fact that we are not registering them properly is a different problem.
Okay.
It doesn't mean that we should stop them from coming here. It just means that we have to do better in enforcing the current rules. The fact that we are not collecting taxes from them doesn't mean that we should stop coming.
Okay.
Enforce the tax laws better.
I guess the problem is with us, seems to be.
Well, I don't know what to say to that.
Oh, anyway, so so the question is, I'm just concerned because I know when I was reading it, the Chinese government is not, they don't like these POGOs. I mean, is it not going to have an impact on our, if we are anchoring whatever growth we have on them? And, you know, the Chinese government said, hey, you can't, we don't want to do that. In Philippines, stop that. I mean,
Well, in the same way that Western countries don't like offshoring to the Philippines, they could have shut that down many times
okay, it's the same
over
story.
the last 20 years. And yet, for some reason, they allowed to make it grow. China doesn't like the POGO sector, but there's a reason why they continue to allow Macau to operate in the same way that they don't like gambling.
Okay. So you really need to read between those statements, huh, to be able to see it. Okay.
Yeah.
All right.
Next.
Next.
And so in the property sector, look at this asset class, okay? Look at SMDC, the very modest SMDC condo. In the last 15 years, had you invested in the condo of SMDC, which in 2008 cost only 80,000 pesos. Today, it's costing north of 200,000 pesos. You'd have made a fantastic return, not just on paper profits, not just on capital appreciation, but on fantastic yields.
Okay.
Today, your yield on your modest SMDC condo would be close to 25% on 1 year. And that's just for 1 year, never mind all the other 12 years that have passed. Next. Now, I want to respond to what everybody says, that we are being overrun by foreigners. Okay? This shows you 15 countries all over the world being, with France, Italy, Spain, being the 3 most visited countries in the world. So this slide shows you in blue the native population of each of these countries, light blue the foreign workers in each of these countries, and red the amount of foreigners visiting these countries. Okay?
Okay.
What does that tell you? It tells you that France, France, Italy, Spain, and Germany, the three most visited countries in Europe, have more foreigners, foreign tourists visiting those countries than the actual native population. Isn't that kind of insane?
Mhm, mhm.
In particular, Spain. Spain has almost a 1:2 ratio. Almost 1:2 ratio. For every one native Spaniard, there are almost two foreigners visiting Spain. Okay? And in Spain, there are 12% of the population are foreigners.
Okay.
Okay? Then you look at the most extreme example, Hong Kong and Macau. Hong Kong has got a native population of 4.5 million people, and yet they've got a foreign tourist base of close to 60 million people. That's
Mhm.
kind of insane. That's like 12 times the number of foreigners for every local. And then at the very far side of this equation is the Philippines. Look at the Philippines. Nobody is coming to the Philippines. Despite the fact that we've had the record number of visitors last year at 8 million. Nobody is coming to the Philippines. We are not being overrun by foreigners. Whoever thinks that we are being overrun by foreigners just needs to look at these facts,
Okay.
statistical facts, undisputable. Nobody is coming to the Philippines. Nobody. Period. We have a long way to go.
And there's only 200,000 foreign workers here. Okay, compared to other
We
areas.
barely have 100,000 foreign work. Even at the most extreme, 400, sabihin mo natin, let's just, there are 400,000 foreign workers here. At
Mm.
400,000 foreign workers, legal or illegal, that is still one of the lowest in the world.
Okay.
Nothing. Nothing. We're jumping up and down with 8 million foreign tourists. And look at that. Nothing compared to what's happening in the region. Next slide. I also want to say that if we want to develop our tourism market, we cannot do it without China. China is the single largest foreign market in the world. In year 2000, there were 4.4 million foreign, uh, there were 4.4 million Chinese that traveled around the world. Okay? Today, that market has grown from 4.4 million to 150 million Chinese travelers over the world. That is kind of insane. And this slide shows you the amount of foreigners per country, and colored red is the proportion of Chinese tourism into those countries. You cannot develop a credible tourism market without China participating. Okay? If we want to grow and become wealthy, we have to have China participate in this market. As simple as that.
What is the reason why they don't like to visit the Philippines? I mean, they visit, of course, yeah.
Well, they're starting to visit. So 1 million Chinese visited us last year, but that's nothing compared to, let's say, the 11.5 million that visited Thailand last year.
Yeah. Okay.
Or the 30 million, 40 million Chinese visited Hong Kong last year. Except that the reality is that there are easier places to go to. There are better places to go to than the Philippines.
Right. Okay.
They come here, and we don't welcome them.
Yeah.
Whereas they're welcome in many parts of many parts of Europe. I mean, hopefully even until now, because of this COVID thing, there's a lot of irrational racism that's happening. There's a lot of irrational behavior and racism happening all over the world against the Chinese, and that's very unfortunate, and that needs to be corrected. But consider this, okay? China being the largest at 150 million tourists from China, and that's only with 10% of their population with passports. It is foreseen that in the next 10 years, that population base of passport holders will double to 20%. And even just 20% in the next 10 years, That's going to grow the tourism market from China to almost 300 million. 300 million, which is the size of the entire population of the US.
Yeah.
And here's another statistic, okay? 80% of global tourism happens within the region. What does that mean? That 80% of Asians will travel within Asia. Only 20% will leave Asia. Only 20% of the Americas will travel outside of Americas. Only 20% of Europeans will travel out of Europe. 80% of tourism happens intercontinental, meaning within the continent. They will not leave the continent. So for us to market ourselves as a country, we should stop wasting our resources on encouraging people from the US, Canada, and Mexico, and Latin America, or Europe to travel to the Philippines, frankly. Because out of that, the best is a 20% yield, at best. And we are sharing that market with 20, 30 other countries in Asia, right? For us to get the highest bang for buck, we have to keep selling to our own neighbors. Next is that you just have to consider, besides selling bananas and mangoes to the rest of Asia, what else do we trade with Asia? We import more from Asia than we export to Asia. And that is the sad fact, right? Besides pineapples and mangoes, what else are we selling to the rest of Asia, who are logistically 2 hours away, 3 hours away by cargo flight?
Mm-hmm.
It's ridiculous how we do so little. We do more with the Japanese and the Americans, yeah, and so little with the Indonesians and Hong Kongese and Chinese who are an hour away or 2 hours away by flight. Next. REITs. The reality is that only 1% of global assets are REITed.
Mm-hmm.
Number 2, next. And if you look at this slide, had you invested in the Singapore REIT 10 years ago, it would have proven to be some of the best ways to preserve your capital. In fact, you would still be up versus 10 years ago. And I think, next slide, this will show you that the quality of assets in the Philippines are some of the best in the world. You have the top 10 developers owning 45% of all office space in the Philippines. 14 million square meters. That's not a small number. And the next 10 developers, the next 10 own another 10%. So 55% of all office space are owned by just 20 companies. Next. We have 15 million square meters of mall space throughout the country. And most of that, 80% of that, is owned by just 5 companies. And this is how it's distributed by company and by region. Next. And if you combine the total number of office space and the total number of mall space, that approximates about 30 million square meters, of which less than 20, well, about 15 of them own 80% of that stock. What does that mean? There's 15 to 20 developers that can go to the market and say, we together own 22 million square meters of real estate that can be REITed. Very few economies in the world can say that they have 22 million square meters of REITable assets. And that will give longevity to our malls and to the REIT market. And we haven't even added the hotel sector here, which is going to be the next big boom. Yes, the hotels are being crushed right now, but when we get our tourism numbers right and our tourism platform right, the next big boom is tourism. And we haven't even included infrastructure companies here. San Miguel will be a fantastic REIT play. Metro Pacific will have a fantastic REIT play on back of infrastructure in hotels and hospitals. And so there's many, many more opportunities in the REIT sector.
Yeah.
So in conclusion, this is why I say, I conform and use Jack Ma's quote, Jack Ma's statement. Today is hard, tomorrow is going to be worse, but the day after tomorrow will be sunshine. Because we have to look past this crisis and see what's around the corner. BPOs are going to grow, the POGOs are going to grow. POGOs are friend. We need to figure out a China play because China is the biggest investor and tourism market in the world. And they're not doing anything meaningful in the Philippines, and they should. And that once the stock market's clear, the REIT markets will be a sustainable platform going forward.
From what you say, it seems to be I stay away from stocks and just look at REITs now, huh?
Well, I think there are many more things to do with the stock market.
Yeah, I guess it's a portfolio play, but yeah, it's sad that we've taken us a long time to come up with the REITs. But I guess this is gonna push, and this is gonna be good capital build up, and even for the investor, it's gonna be a good play, right?
Yeah.
So, David, last question for me. More practical. I'm a small time investor. I have a few units out here and there, or I'm considering buying some, or I'm part of a family that owns. What should I be doing at this point in time? Should I be concerned? Should I just hold on? What would be your recommendations to this retail investors, people like me who have a few pieces of property?
So number one, cash is king. Number two, this reminds us that we should not take too much loans.
Mm-hmm.
We should always be modest with our loan ratios. And I guess I wouldn't want to go anything beyond 50-50 loan ratios,
Okay.
right? And number three, cash flow in assets that are secure.
Okay.
So I just showed you one example, SMDC. SMDC apartments have had steady cash flow over many years, right? I'm not saying everybody has got that kind of cash flow, but at least for a majority of SMDC unit owners, their lease income and capital depreciation has not been disappointing. And that is just one of many, many, many examples in the market, and then we have a saying in the property sector, which is time will correct your mistakes. And so for as long as you can hold on to these assets, time will correct your mistakes and you will be proven much better off in the property sector.
So if you guys, the roles of property right now, you have the cash, you have, you're not too much into debt and you can hold on a little bit. It's wise for you to hold on, not to sell any. I mean, once this market's opening, some people, should I sell already? Assuming that you can keep all those and you have enough cash to position yourself, it's good to hold on.
Yeah.
Oh, good. All right. Thank you, David. This is, as usual, you are our go-to guy when many things in the property market. You tend to explain it well. You don't oversimplify, and yet people get to understand. So, David, some parting words for our readers, for our viewers now. Anything you want to remind them? You can be as practical as you can.
Well, I just want to reiterate: cash is king. Cash flow. Time will correct your mistakes. Keep debt levels low, and think long term. And please remember what Jack Ma said. Tomorrow will be the day after tomorrow will be sunshine, and that's what we have to look forward to.
All right. So thank you very much. This is David Leechiu. I'm going to put the links of David's company. You can check them out. They have a website and all these things. And of course, stay tuned with our future. Subscribe to this channel. And again, it's such a blessing to be able to interview the one and only David Leechiu. Bye, David.
And Randall, please, you're feel free to share
Of course.
the presentation with whoever you like.
All right. Okay. Thank you very
Thank
much.
you.
Thank you.